In this video, we will be talking about trends. So what is trends? Trends is the overall or general direction of the market. In trading, we have three types of trends. We have the uptrend market, the downtrend market, and the consolidation or ranging market. So an uptrend market is a type of market where price creates series of higher lows and series of higher highs, having a low formed at this point, another low formed here, a higher low, a higher low, higher low, higher low. So these lows are higher lows and these highs are higher highs, having the first high at this point, the second high, a higher high, third high, higher high, fourth high, fifth high, higher high. So we've got series of higher lows and series of higher highs. So why are these lows and highs called series of higher lows and series of higher highs? When we check the value of the first low, we would see that its value is at 199,069.59, the value of the first low, and the value of the second low is at 206,553.75. So comparing these two lows, the first low and the second low, we would see that the value of the second low is higher than the value of the first low, because the value of the first low is at 199,000, while the value of the second low is at 206,000, making the second low a higher low. The same thing is applicable on confirming this third low, which has a value of 208,744.24, while the value of the second low is at 206,000. 208,000 is higher than 206,000, making this third low a higher low. The same thing here as well. The fourth low has a value of 211,482.36. And the previous low has a value of 208,000. So 211,000 is higher than 208,000. That's why this low is called a higher low. So these are higher lows and higher highs. So that's how to confirm if these lows are higher than each other. Yeah. Checking the highs as well. The first high, which is this high, yeah, it has a value of, let's confirm, 209,443.98, while the second high has a value of 210,474. So 209,000 is lower than 210,000, making this high a higher high. We have another high at this point, which has a value of 211,604, and the previous high has a value of 210,000, making this new high the current high, basically, which we assume this high to be a higher high, having a value of 211,000. Next high as well, 214,981, a higher high because it's higher than the previous high of 211,000. Next high has a value of 216,000, a higher high as well because it's higher than the previous high of 214,000. So that's how these highs and lows are confirmed here. So whenever you're having doubts in confirming if these highs and lows are higher highs and higher lows or lower lows and lower highs, always do well to check the price value of these highs and lows. So this is an uptrend where price creates series of higher lows and higher highs. In this type of market, you have to look at for buy opportunities. What we have to do is to spot out the historical levels and zones formed on this level, waiting for a level of resistance that got broken and retested, turned support for a buy opportunity. You can see how this level of resistance here got broken, price came to retest it and gave the buys as a support. So we got the next historical level at this point, a historical level of resistance that got broken and expected to get retested for a support here for the buys, because checking past moves, price has reacted to this level in the past, getting the buys as a support, got the sell resistance. So the last reaction we had on this level was a resistance, which price is expected to come retest this broken level of resistance, now turn support for a possible buy here, because the market is in an uptrend. We've got buy possibilities. So that's it for an uptrend market. Let's proceed to identifying a downtrend market, clearing these lines off. Yeah. So here we got a downtrend market where price created series of lower highs as seen and series of lower lows. So let's do the same thing as well, confirming these highs and lows if they are actually lower highs and lower lows. So at this point, price formed a high, formed another high, a lower high, lower high. So let's put out these highs. Basically got the first high at this point, second high, I got this a lower high as well, three lower highs spotted here. We still got more lower highs, but let's confirm these three firstly if they're actually lower highs. So we have the first high at this point, with a value of 229,582, and the second high having a value of 226,577.88. So this high is definitely a lower high because the value of the first high is at 200 and let's say 230,000 and 98.19, while the value of the second high is at 226,000. So 226,000 is lower than 230,000, making this high a lower high. Same thing here as well, this high having a value of 224,999, which is lower than 226,645, which this high is confirmed to be a lower high. The same thing here as well, 202,000, 218,000, 215,000. So all these highs are lower highs and these lows are lower lows, confirming the value of the first low. This is the first low. Let's put it out for clarity's sake. First low there, second low, a lower low at this point, the third low here, lower low here. So let's confirm if these lows are lower lows. Checking the value of the first low, it has a value of 225,030.16, while the second low has a value of 222,723.75, lower than 224,000, making this low a lower low. The next low has a value of 218,000. Previous low has a value of 222,000. This low is a lower low as well. Next low 250,000, the previous low 218,000. So these lows has been confirmed to be lower lows. In this type of market, you have to look at for sell opportunities. The market being on a downtrend confirms that the sellers are in control of the market, that's the bears. So we have to look at for sell opportunities here. Spotting out broken level of support that got retested, turned resistance for sell opportunities. So let's spot out the historical levels formed on this downtrend, having this level to be one of those levels, a level of support here, support. It got broken and retested, price sold as a resistance because the market is on a downtrend. We had sell possibilities. The next level at this point, support here, support, got broken, retested, price sold as a resistance. Next level at this point, a broken level of support here, support, got broken, retested, resistance, price sold the first time, sold the second time as a resistance. So the market being on a downtrend, support the sellers. We have sell possibilities here. Also got another level at this point, a level of support that got broken, support here, this level got broken. We had this mad sells, price dropped massively, then came, give a retest of this level and sold strongly as a resistance. You can see how far price dropped to the downside here. And when spotting these trend levels, make sure 2 points are matching. 2 points of the trend support and the trend resistance are matching up here. This trend line touched this point the first time, touched this the second time. This is a confirmed trend support, the trend resistance as well. Make sure 2 points are matching to validate a trend level. This is trend resistance, having the first point. Let's call this the first test and the second test here. So this is a confirmed trend resistance level, trend support here as well. It's called this the first test of this trend resistance level. The first test here and the second test, this trend resistance has been confirmed on getting to test of this level here. The first test here and the second test, a confirmed trend support. So let's see if we can spot the next type of trend we've got. That's the consolidation trend or the ranging trend, where price creates series of equal lows and series of equal highs. And I think we have a ranging trend at this point, a ranging market, spotting the trend resistance level, the ranging trend resistance level here, and the ranging trend support level. Price bought the first time support, pushed up here, sold, resistance, bought from here, support. So we've got 2 equal lows and 2 equal highs to confirm a consolidation or a ranging market. So in this type of market, you have to either look out for buy opportunities or sell opportunities, selling from this consolidation resistance level and buying on the consolidation support level. But first, wait for 2 equal lows and 2 equal highs to be formed to confirm this ranging market. And because I am spotting this market trend on the 1 hour time frame, do not mean that we cannot spot this trend on any time frame. The 1 hour time frame, the 30 minutes time frame, the 15 minutes time frame, 5 minutes time frame. We can spot the market trends on every time frame. As we can see on this 5 minutes time frame, we've got a downtrend market where price created series of lower highs and series of lower lows. That's to show you that this market trends can be spotted on any time frame. We also got an uptrend here, higher lows and higher highs on this 5 minutes time frame. So that's it, guys. That's about market trends, how to confirm a trending market, confirming the highs and lows on these trends and the type of trends we've got this new week. We'll be going hard in the synthetic indices market, and I drop high probability trade setups and signals on my Telegram channel. You don't want to miss out, trust me. To join my Telegram channel, link is in this video description and is pinned on this video comment section, so click to join and don't miss out. For more indicative videos like this, don't forget to smash the like button, drop a good comment on this video and subscribe if you're ready to subscribe. And to my returning viewers, I appreciate your support for always engaging in my videos. Chilling me slot, guys. Let's do more and do have a wonderful day.